The Federal Reserve holds their final meeting of 2025. What did they decide? More importantly, what does it mean for self-storage? And where are banks lending across different storage projects? We've got a graph that might surprise you. Today on the Self-Storage Report, I am your host, Thaddeus Campbell. You may notice the conspicuous absence of my better half, my co-host, Chris Berg, the AI storage guy, not able to make today's show. We're looking forward to seeing Chris back for next week's episode. Speaking of next week's episode, a quick teaser, we're going to have a capital markets roundtable, a who's who in that area. Excited to have Anna Saradze-Herdina of Talinvest, Andy Bratt of Gantry, and Cody Baker of Baker Capital Partners are going to join Chris and I on a capital markets roundtable, find out everything you need to know about what's happening in lending as we head into 2026. Before I go any further, a shout out to our title sponsor, the great folks at Quick Store, Brett Henry and his team building the Italian supercar of property software management systems. Really excited to have Quick Store join us, and we'll hear more from Brett later on in the show. But leading things off today, we're going to talk about the Fed. They had their meeting this week, made the announcement yesterday. Jerome Powell goes in front of the chair and explains their decision to make the final quarter point rate cut of this year. As you can see here, they decided to knock a quarter point off the federal funds rate, the overnight lending rate. That's their hallmark that they decide on. Everyone expected that quarter point rate. Maybe more surprising, by the way, that federal funds rate now sitting between 3.5 and 3.75. Maybe more surprising coming out of that federal funds decision. Two things. Number one, the Fed has decided that they're going to invest $40 billion in buying treasuries. Obviously, we've been in a period of quantitative tightening over the last few years as they started precipitously raising interest rates in March of 2022. We've seen them have a Fed policy trying to control interest rates and not interest rates, inflation. We've seen a reversal in that. And this decision to buy T-bills is driven by an effort to create more liquidity for banks. As the Fed buys T-bills, that allows the banks to have more funds on hand on their books. That then allows them to be a little more aggressive in their lending practices. Whether this is a good decision at this point or not, we're going to have to wait and see how this plays out in the market. The idea being, though, that we're going to see more and more lending happening in the market as the Fed does this. The second probably thing that I was most surprised about here, a lot of people expecting as we move into 2026 that we're going to see even more Fed rate cuts. The decision in December was a 9-3 vote by the 12 members of the board to cut rates by a quarter point. In Chairman Powell's discussion at the end of the 3 days of meetings, he indicated that they are planning on only one more rate cut in 2026, which I think is going to come as a little bit of surprise to the broader market. Maybe they alluded to maybe one more cut in 2027. So something we definitely want to keep an eye on. How are the markets responding to that? What's happening in the self-storage world as a result of those rate cuts? Well, I try and keep an eye on what's happening in stock prices. Public Storage and Extra Space as the two largest REITs specifically. They've seen a really challenging time since their third quarter results announcement October 22nd and 23rd. Extra Space dipped over 20% at one point at their lowest from October 22nd until today. Public Storage near 15% drop in their stock price, a pretty steep decline over the last couple of months in light of the Fed decision to do another quarter point rate cut. It's been a pretty strong day for both. As of noontime, 12:30 when I last checked, both of those stock prices up over 2% just today. Obviously, a long ways to go to climb back to where they were on October 22nd, even longer to climb back to historical highs, which they had fallen very short of, obviously, since the COVID boom spiked both of those stock prices very high. But wanted to give a recap of what's going on in storage specifically in light of what the Fed announced. Are we going to see increased moving in the housing market? There are some people out there that say that there are some signs. Armand Argajanians, who we follow, and in fact, I'm going to give him great credit as we move into our next slide that I'm going to show you, folks. This came from Armand in a post that he made. He's alluding that there's some things that he checks as far as signs that the housing market is going to start to pick up a little bit, that give him hope that the housing market's going to start to release a little bit, that we're going to start to see more movement there. Obviously, that's a good sign for storage. drops in interest rates ostensibly are going to mean drops in cap rates and transition. Certainly no shortage of people wanting to buy self-storage right now. So those two things are certainly good indicators coming out of the Fed rate decision. I'm going to pop up this graphic here. Armand shared this earlier this week. The types of self-storage loans originated in the first 3 quarters of each year. This obviously does not recap 2025, goes back to 2024. But a couple things I want to point out here. Armand put this up. You can see bridge as the second option here. Acquisition and development, very small at the beginning. The predominance being permanent debt, right, of the 70,000 or so storage facilities that exist in the country. But in 2024, in the first 3 quarters of the year, for the first time in the 5 years represented here, permanent debt as a percentage of the total loans originated dropped below 50%. And the spike that's very obvious here is not in bridge loans, what we've been talking about a lot. Is there a real stress in the market, distress, I guess I should say, in the market as far as lending goes? Not a lot of bridge loans. We talked about the Extra Space program. Public Storage has a program. There's others out there that offer a similar product for people trying to bridge the gap between construction and permanent debt. Those are not a big percentage of any of these years. But look what happened in 2024 to construction lending. Really caught me by surprise here that the number in 2023 was 17%, the highest year of construction on record, deliveries, I should say. Now, maybe that shouldn't surprise me that 2022 was 28%, as many of those loans maybe were originated in 2022 for products that came online in 2023. The problem with that logic is that 2024 had almost as many deliveries as 2023. So why would 2023's construction lending only be 17%? And then the real shocker is 2024, where you would think that those loans being originated construction would either be for projects that are going to finish in 2024 or finish in 2025. Of course, 2025 has been well short of 2023 and 2024 as far as construction projects. So what's the thesis here? What could explain this? Well, maybe we have a little bit going on in the storage world of what's happening in residential housing, where folks were able to lock in permanent debt on projects in 2020, 2021 that are not going to come up for refi, even going back to 2019 and 2020, maybe things that are coming up to their balloon payment. Why construction such a big piece of this? Well, if you're not seeing as many people getting permanent debt, and a lot of those projects that came out of the ground in 2022, 23, that should be coming to their economic occupancy and starting to get permanent debt aren't there yet. Still doesn't explain that significant leap in construction lending in 2024. But this I wanted to share this as it really fascinated me. I'm going to pick people's brains in the industry, and please comment on the post. If you're seeing this on LinkedIn, if you're seeing this on YouTube, comment. I want to hear your thoughts as to what's driving this. Of course, we have the capital markets roundtable next week, and I'm going to pick the brain of some people way smarter than me on the debt side of it as to what's leading to that massive increase in the percentage of construction loans. Chris and I talk very frequently, is there oversaturation in storage? Certainly in some markets that can be said. Do we need to have that pullback on development? For personally, even though S3 Partners are owners, reps, and project management company, we love ground up development. That's our wheelhouse. It's been nice to see a little bit of pullback there. Very interested in and want to tease again next week. Anna Saradzi, Herdina, Andy Bratt, Cody Baker, really, really smart folks in that space. We'll pick their brain to get a little more depth there. I mentioned that Quick Store is jumping on board with the Self-Storage Report as our title sponsor. Really excited, not only because we believe in what Quick Store is doing and we believe in their mission with the property management software system that they've retooled completely. Quick Store has been around for a very long time, but being able to partner with Brett Henry, co-founder of Trojan Storage, now owner of Quick Store, his team, Andre, who's the driving force on the development side of the software, and the team behind them, that's really amazing. Really believe in what it is they're doing. And that opportunity, Brett Henry acquired Quick Store in 2021, really spawned from Brett's vision of what's happening overall in the industry. So I want you folks to hear, we had Brett last week on the show, but wanted to just replay this clip from him to really give insight into where he sees the industry going and why Quick Store becomes so valuable and important, and why he felt it was so important to build this software.
I think you're going to see more and more, regional guys come in that have an expertise in their area and understand the customers and understand the basis than some, just kind of big REIT that's coming through.
Wanted to share that clip, and it hit home for me. Obviously, I have my other podcast, Stories Behind the Door. This year alone had Dave Deems on, Herbie Bowman from Storage Mart, Dave Deems from Storage Asset Management, for those of you who don't know him. Rana Siegel was just on a couple of weeks ago from StoreQuest, and they really echo Brett's belief in what's going on in the market, where Extra Space is still the big player, Public Storage still doing third-party management, CubeSmart, obviously. These REITs are playing a big role, but more and more we're seeing people that are going to smaller operators. And Brett and the Quick Store team have really built a platform that's targeting those folks that might run 10 to 200 stores instead of the 2 to 5,000 that Extra Space and Public operate. What he sees in the vision that he has is, hey, listen, you've got to be able to have access to the data and be able to have the decision making and have the pattern recognition in your software management system that allows you to be able to compete with those folks that just have so much data at their fingertips. So kudos to the team at Quick Store. If you're an operator, whether you own one store, if you own 200 stores, and you want to get a free demo of this software, click the link that you see at the bottom of the screen. We're going to be able to give you a free demo of that. And further, if you love the software and you want to sign up for the software, not only are you going to get a free demo, but if you reference the self-storage report and let them know you came from us, they're also going to waive the administrative fee to get you guys started on that program. So kudos to the team at Quick Store. Looking forward to a long relationship with them as our main partners on the self-storage report. Wanted to give a quick recap. Earlier today, I taped the latest episode of the Stories Behind the Door podcast with Wayne Woolsey, an industry veteran, very well respected around self-storage, Kiwi 2 Construction. He's the CEO and president. They do their general contracting firm, but really the specialty that Wayne has and his team and his co-owners have really built their reputation on is structural, is providing the steel for self-storage, now also moving in to the small bay flex world. And I wanted to just share a conversation I had with Wayne on pricing in steel today. We saw that crazy spike shortly after COVID, where steel was going up into the couple $1,000s a ton price. Very fortunate as we finish 2025 going into 2026, where we're now into that $900 range per metric ton of steel. As Wayne said, been, going back even pre-COVID, $800 to $1,200 has kind of been the price range for steel. And we're seeing that on the low end of that price range right now. And nothing he's seeing is making him feel like that's going to change as we go into 2026. For those of you folks who are ground up developers, whether that's self-storage or it's small bay flex, which there's a lot of things going on. Interesting to hear from Wayne. Folks know that that's kind of an area that I really like and am pursuing, that small bay flex development side of it. He's currently got 10 small bay flex type developments that Kiwi is working on. So certainly we're seeing some growth in that area. Whether you're a self-storage developer or whether doing small bay flex projects, you can reach out to Wayne directly. Wayne at kiwiconstruction.com, easy to get a hold of him, or you can go to kiwiconstruction.com and get an idea of what's going on. As Wayne said, he loves to be a back of the napkin guy. He can give you a really good idea of price and timeline right at the beginning in a conceptual sense, if you guys want to get a good idea of what's going on there. So shout out to Wayne and his team. Really cool to be able to get an idea of what's going on in the steel side of the industry. I want to shout out to folks and give a little bit of an idea of what's coming up in our industry over the next couple of months. I'm very excited. I'm going to be traveling a lot as we go into the new year. Fortunately, it's the tail end of December and I get to stay home for Christmas, but a lot of big events coming up early in 2026. So you folks can look here. You can see the investment forum. For my money, the most informative show of the year. There's some great shows across self-storage, but the number of people that come to New York City for this one-day event, January 7th, that sit on a table and give high-level information for storage in one 8-hour session, it just doesn't exist anywhere else that I've been. So I'm looking forward to seeing if there's any other events ever that are as impactful, but really a powerful event to start your year off with. The investment forum put on by the New York Self-Storage Association. Ron Malagisi and Rana Siegel do an amazing job of putting that on. Shout out to them and to my friend Stan Bonilla, just bring an incredible group of people to really highlight what's going on in the storage industry. For the first time, I'm going out to Snowmass this year for the executive ski workshop. Guys, reach out to me if you're going to be at either of these events. Would love to hear from you. Would love to set up some time to connect and talk about, whatever it is that your niche is in the self-storage industry, whether it's something that S3 Partners might be able to help you on, or whether it's simply something that Thaddeus Campbell might be able to give a little insight on, or you might be able to teach me and give me some insight. Talk to me about the show. I want to, we want that feedback. Chris and I really want to hear what's going on and what you're taking out of the show. What would you like to see? Come and talk to us about that. The Executive Ski Workshop, really looking forward to that. Called up the agenda. It's fantastic. It's yoga at 7 a.m., one presentation at 9 o'clock, and then go ski for the rest of the day. So really looking forward to being out there and connecting with you folks. If anyone needs a ski buddy that hasn't been on skis in 20 years, reach out to me. I would be happy to conversate about a couple folks to go down the slopes with. And then, of course, the big event for the first half of the year, SSA 2026 in San Antonio, March 18th to 20th, coming up very, very quickly. You can register for the SSA National Spring Conference there. Chris and I will be at the SSA Spring Conference as well. Certainly want to meet with the people that are watching our show and getting information from our show, and looking forward to connecting. Also looking forward to connecting with our partners here. Obviously, Quick Store, our title sponsor, but Tract IQ, they were our first partner, our data partner on the show. We have so much respect for those folks, and the good folks at Johnson Insurance, and my friend Terry Campbell, no relation, but somebody who I count as a close friend. Really looking forward to connecting with those folks at these events as well. So little tidbit into the upcoming events that we have going on. I wanted to share something with you folks today. I'm filling some time here as Chris is not able to kind of be my ombudsman here and give feedback, but wanted to share something I thought was really powerful. A lot of folks that are connected with me are in this small bay flex world. So Tract IQ, who is our data partner, really, really powerful data for self-storage. I know NYSSA just put out a post where they're going to share their underlying data sets that they use to develop their third quarter REIT report. So make sure you go on LinkedIn and check out NYSSA's feed, and you can get a link to figure out how to do that. You can also check out Tract IQ at the link down below, get a demo of the software. But I'm going to share my screen for a minute with you folks, and I really want to show you, especially this is more for folks that are in the world of small bay flex than self-storage. How am I using Tract IQ to really help me make decisions? Right here, the red dot is my location. Yellow is other new developments that are coming. I'm on a 20 to 25 minute radius. Obviously, I might be looking at a 3 to 5 mile. I'm going to use a 20-minute drive time much more for flex when I'm looking at flex developments. And I promised I was going to dig into this a little bit on the flex side of it. I want to show you what I'm really looking at. And this is a very powerful tab for me. I'm going to click off self-storage. First, I'm going to click on flood zones here. This is El Paso, Texas. Not much nervousness about, you can see undetermined risk area, really not worried about flood zones here. This is not something that's a huge concern in West Texas. I'm going to shut that off. I would double check that on a wetlands map and a FEMA flood zone map as well, but it's right there. It can help me make a very quick determination. The tab that I really love here and why I'm so in love with the Tract IQ platform is this housing development tab. Not only can I understand in total what's going on, and as I scroll over here on the left side and I see my population in a 20-minute drive time, if you guys want to communicate with me offline, I'm happy to kind of give you an overview of what the metrics I think are important in small bay flex. But more importantly for this and for what I'm trying to show you, I'm going to take a quick look at what's the growth look like based on housing. And you can see, based on the census, El Paso looks like 3.5%. Based on the population growth projections, based on housing, we're at 1.4%. Not terrible by any stretch, but maybe not as high as I want. My target audience for small bay flex, I really want to go look at those tradesmen, those people running small businesses that are going to service new residential and new commercial construction. So my ability here to just look at this map, and then I can start to click on some of these little bubbles, and I can get a really idea. This is in final planning. Is it certain yet? No, but is there a pretty good chance this $35 million, 308 unit project's going to happen? It's pretty close. I can come over here and I can click. Let's see what's going on here. $4 million, 30 units. It's in design, still a little early. Am I putting a ton of faith in it's going to happen? Maybe, maybe not. Final planning, again, $10 million. I'm looking for one that's got, actually, I'm going to come back over here to the first one. I can also, in a bunch of them, see the owner's name. I can give someone a phone call and say, hey, I'm looking at developing a small bay flex project in the area. I see that you're doing this $35 million project. Wanted to see if that's something that's still happening. And it makes it easy and convenient at my fingertips. You can see down here also, I can click commercial developments and I can get a read on what's going on from a commercial construction side point also. So wanted to take a second and just share that with you folks. How am I using Tract IQ? Why is it that we wanted them to be our partner as a data partner? It's not just for me about the storage data. It's about that access to those other things that's very easy. It's at my fingertips, very user-friendly interface. I'm not that smart, and it was pretty easy to get the hang of using the platform. So kudos to Noah Starr, Hayden, the whole team at Tract IQ for what they've built over there. Really, really cool project. And it's in the spirit of Christmas. It's December 11th. We're coming up on Christmas time. I'm going to give one more shout out to our final partner, Johnson Insurance. And I like to give a little color as to why we chose these people. Chris and I have been very, very lucky. We've approached 3 people to be our partners, and all 3 of them have chosen to be partners on the show. 2 people to be partners, and then 1 person, of course, Quick Store, to be our title sponsor. All 3 have agreed to work with us. And so feel very fortunate and grateful that that's been the case, but also want to explain why is it that we approached those people. In every case, the first person we approached chose to work with us, but we chose them for a reason. In the case of Johnson Insurance, small town, North Carolina insurance company, Terry Campbell is, again, an industry icon. Been in self-storage since 1991 when he started doing CAD drawings for Petco, moved on to build the lending platform for Live Oak Bank, largest lender in self-storage, left Live Oak, went to Copper Storage, was the CEO of Copper Storage Management for a while, left them to retire, but got recruited by Johnson Insurance to come build a storage platform for them, and had a conversation earlier this week with a client of Johnson Insurance and how important it is to have their expertise. Many of you know Marla Cholich, the storage queen out of St. Louis, Missouri, incredible personality, and had a conversation with Marla that really highlighted why we take so much pride in having Johnson Insurance as our risk partner.
Some deals that you do are relatively pain-free. Some of them you don't forget, and this is one of them. We kind of had everything in the book thrown at us, but very frankly, if it hadn't have been for Natalie, Terry's associate and colleague, that deal would not have happened. It was a very complicated easement requirement, and it requires some very specialized connections in insurance, and they did it.
They did it. Johnson Insurance able to salvage deal. Of course, Marla and her partner, Alex Herbs, are brokers. And so the cost of not getting that project across the finish line is not only to the seller and to the buyer, but to Alex and Marla and their team at EquiCap Commercial. There's a cost. If you don't find partners in the industry and vendors that can help you finish these deals, everyone hurts. And so shout out to the team at Johnson Insurance. You can check them out at gojohnsoninsurance.com. You can follow me on LinkedIn and get links to their website. Again, mention the self-storage report if you do talk to them. They will give you a free review of your risk profile. We're going to be playing a couple other clips over the next few weeks of different people that have worked with Johnson Insurance. And the reality is what they're all saying is you don't know what you don't know. Where are the gaps in your coverage that because you're not an expert insurance, you don't necessarily see it? And the last thing you want to do is find out where the gaps in your insurance are when you have a calamity at a site. So shout out to Terry Campbell and his team at Johnson Insurance. Feel free to reach out to them and get a free assessment of your insurance on whatever assets you might have. Love that team and love that group. We're going to finish the show today with the second ever segment that we were brought to by Cam Pactinat. Cam Pactinat was our first ever guest on how faith fuels your business. We're going to wrap up today's episode again as we go into Christmas and we celebrate the birth of Jesus Christ. I was gifted to have an old friend of mine, many of you know that I have a background in martial arts, was a professional kickboxer, ran a martial arts gym for many, many years, and had the pleasure of watching this young kid grow up. Now, I call him young kid. He's now 35 years old, 34, 35 years old. I knew him when he was 15, 20 years ago, and have watched him achieve an incredible professional career. Shane Burgos fought in the UFC, was a top 5, 145-pound fighter at one point, very successful career, was kind enough to come on the Stories Behind the Door podcast. You'd almost think I could talk for a living, and share his journey to the UFC. But what really stood out to me and what's made me so proud to watch him grow is not only his fight career, but his commitment to his wife and his commitment to his kids and his commitment to his faith. So as we wrap up the show today, I want you guys to hear how faith fuels your business. Shane Burgos.
You need skill in this sport, for sure. You need skill in the sport. You need that toughness and that mental grit, but you also need a little bit of a divine intervention, or some people call it luck. I like to call it divine intervention. Like God really aligned the stars for me. Like somebody in my weight class popped. It's an hour and away from my house. I literally drove there. I did a whole fight camp, and my weight isn't that bad. You couldn't write this any better. And then I go out there and I got 7 fights. The guy I'm fighting has over 35 fights that are even listed, let alone the ones that in Brazil that they didn't talk about, and 0 nerves, like not even remotely nervous. I remember going out into the arena when we first got there and just looking up and seeing the ceiling, like how high the ceiling was. I just fought in gymnasiums like 2 years ago. I'm not like literal gymnasiums. So I'm like, this is crazy, but this is where I'm supposed to be. I'm meant to be here. And I was like, no nerves at all. And then I go out there, I have a great fight, and I win the fight, obviously. And man, that was like, thank you, God. I could tell that thank you, God.
Echoing Shane's sentiment as we come to the end of December, I want to thank God for everything that's been bestowed upon me. Hear Shane's full story. You can go to the Stories Behind the Door podcast on YouTube, youtube.com/@ the Stories Behind the Door podcast, or at Stories Behind the Door podcast. And you'll be able to get a link to Shane's full episode. Really incredible story of a young man that's just done things right, achieved the very highest level at the UFC. And a lot of those stories translate into any business that you might be doing. So shout out to my partner, Chris. We missed you today. Looking forward to having you back on the show next week. Again, little teaser, next week's the roundtable, our capital markets roundtable, really fitting as we finish 2025 into 2026. Anna Saradze-Herdina from Talinvest, Andy Bratt from Gantry, Cody Baker from Baker Capital Partners. Really excited. 3 really intelligent human beings, not only intelligent, but really great human beings as well. So looking forward to getting their insight into what's going on in debt and equity in the self-storage space. I am your host, Thaddeus Campbell. This is the Self-Storage Report. He's usually Chris Berg, the AI storage guy. Looking forward to having him back in the pilot seat next week. I much prefer the sidecar and being the co-pilot. Appreciate all of you guys for watching. Again, leave your comments. Tell us what you think of the show. Tell us, subscribe to the show, support us if you can, and tell us what you'd like to see coming up next.